Welcome to the Learning Square. A forex, or a foreign exchange, is the process of changing one currency to another currency. Exchanging of currency is done for a variety of reasons like trade, commerce, or tourism. Say for example, a businessman in the United States wants to import machinery from Japan. He has to pay them in their local currency. Same applies for traveling as well. A Chinese person visiting Paris to see the Eiffel Tower will not be able to use the Chinese currency to pay. This is where the foreign exchange comes into play. The FOREX market is the largest financial market, and it is the market where currencies are traded. The government uses it to implement international policies with other countries, the businessman uses it for trade, and the investors use it to speculate changes in currency prices. It is important to note that there is no central marketplace for foreign exchange. All transactions occur via computer networks between traders around the world, rather than on one centralized exchange. The market is open 24 hours a day, from Sunday 4 p.m. to Friday 4 p.m. Central Time. Forex trading involves trading two currencies against each other. This is referred to as the currency pair. In this example, euro to pound sterling is a currency pair, and it has a value, say 0.89. This means that 1 euro is equal to 89 pence. Similarly, we can have other currency pairs, like US dollar to Canadian dollar, which has a value of 1.30, that is 1 US dollar is equal to 1 Canadian dollar and 30 cents. Trading happens based on this value. If an investor is buying US dollar to Canadian dollar currency pair at 1.30, and this value increases to 1.40, that is 1 US dollar becomes 1 Canadian dollar and 40 cents, then the investor can sell the currency pair for a profit. Similarly, if the currency pair value decreases to 1.20, the investor incurs a loss. Just like a stock, the forex trading can also happen in the spot market, as well as in the futures market. Spot market is where the financial instruments are traded for immediate delivery. Futures, on the other hand, are traded based on delivery at a future date. The forex trading offers huge leverage. The investor does not have to pay the full amount when investing in the forex market. He can pay a fraction of the amount, which is referred to as the margin. This margin requirement varies from 2% to 20%, based on the size of the trade, with 3 to 5% being the average amount. The trading usually happens in either a standard lot, which is 100,000 unit increment, or a mini lot, which is a 10,000 unit increment. There are also some brokerage firms who issue micro lots, which are 1,000 units of increments for trading. Say for example, if an investor wants to buy a mini lot of a US dollar to Canadian dollar pair, he has to invest $14,000, but based on margin requirement, if it is 3% here, he can enter into this trade with just $420 invested upfront. Since the leverage is high, the chances of profit and loss are both high here. Let us start by seeing the advantages of forex trading. 1. This is the largest market in terms of daily trading volume, and hence offer the most liquidity. Hence, it is easy to enter and exit a position in any of the major currencies. 2. FOREX market is traded 24 hours a day, 5 days a week, offering long trading times. Now, coming to its drawbacks. 1. High risk is involved due to high leverage. 2. Investors need good understanding of economic fundamentals and indicators. Each of the currencies in the currency pair has an interest rate defined by their central banks. In this example, for USD, it is the Federal Reserve System or the Fed, and for CAD, it is the Bank of Canada, BOC. As discussed earlier, when an investor trades a currency, say US dollar to Canadian dollar pair, it means that he is trading one currency against the other currency. In this case, it is USD versus CAD. It can also be seen as the investor is long on one currency, and short on the other currency. The currency which he is long, is referred to as the lending currency, which is USD here, and the one he is short, is referred to as the borrowing currency, here CAD. Now, if the interest rate for USD is higher than the interest rate of CAD, he gets credit. Similarly, if the interest rate of CAD is higher than USD, then the investor will be debited. The difference between the two interest rates is referred to as the interest rate differential, which is a key value to keep an eye on. Day trading and swing trading is comparatively easier in the Forex market compared to other markets. For investors looking for a long-term investment, it is important for them to understand the economic fundamentals which drives the currency value. So, now that you are familiar with Forex, are you also looking to start investing? If your answer is yes, then let's get started. There are many brokerage firms which offer Forex trading. Thinkorswim trading platform is a great place to get started with trading Forex. We have provided link for the same in the description below. Thinkorswim also offers a paper money trading option, which is great for beginners who can practice or try out investing using paper money, get the necessary expertise, and then get started investing real amount. Happy trading! And thank you so much for watching. If you found this video useful, please do give this a like, and add your thoughts in the comments section below. Please do support us by sharing this with your friends and subscribing to our channel. Goodbye.